My top two takeaways from this ag letter are that farmland values had a big turnaround in 2020, and that really kind of built on some of the momentum in the third quarter, but the end of the year was even stronger with a 6% increase from a year ago. And the second takeaway is that farm finances are in better shape, as seen through higher repayment rates and lower need for refinancing and extending loans. So it's really quite a extraordinary change from a year ago, and that's something that will give us a strong start for 2021. The farmer financial situation has improved quite dramatically in 2020 for overall, Midwest farming. You can see that there are fewer problem loans at the end of the year, and the expectations are that bankers will be able to extend credit to, to a higher share of their customers, and not have to cut them off, like in the past, some have had a higher percentage. So it was down to 1.4% is anticipated to be the amount of borrowers that could not qualify for lending in 2021 that after having had it in 2020. So it's a small subsector that are still struggling, but overall the financial condition of most farms improved quite a bit, given the higher income levels and the improved farmland values in 2020. Right now, the interest rates on agricultural loans in the Chicago Fed's district are at their lowest levels in the history of the survey. We have, mortgage rates for farmland that are very low, and that's helping to boost farmland values as there's a relationship between interest rates and farmland values that seems to work in reverse, that when interest rates are very low, that can help boost farmland values. Now, at the same time that we're seeing the big increases in farmland values, we are seeing improvements in agricultural credit conditions, in particular areas like the funds availability for lending have been much higher than a year ago. Repayment rates have been lower than or have been higher than a year ago, which is a reversal from the last 6 years. So it's been a period where we've started to see some better financial conditions, and they're at the same time, still not having as high of demand as a year ago for the non-real estate farm loans. And particularly there, I think the higher income and some of the government funds have helped to push out possibly some of the operating loan needs for farmers at this time of year. 2021 for farmers in the Chicago Fed district could look quite good for some, especially corn and soybean farmers with higher prices from a year ago. And if the harvest in the fall of 2021 turns out to be a good one, then that would give higher revenues even than 2020. There also are some of the bankers that were reporting that they anticipated a couple of profitable years, and given where prices are right now. So that's a positive. The livestock sector, on the other hand, looks to be struggling a bit more and dealing with some of the after effects of the coronavirus pandemic's impacts on the agricultural sector as well as the overall economy.